Hello everybody. Firstly, I'd just like to welcome you to this webinar. We'll be talking about the trade war and its impact on gold and silver prices. My name is Sasha and I'm a financial analyst from the research department at Fortrade. Delighted to have you with us. If you have any questions, please call us and ask to speak to a customer service representative who'll be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although profits can be made trading CFDs, losses can be incurred too, and you need to be aware of this. And now let me explain what a special report is if you don't know. A special report is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand report to trade in the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Special reports are produced by the research department on a daily basis according to market conditions. A special report consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. It's important to understand it's your decision whether you want to trade on special reports or not. Here is an example of a recent market report. You can see fundamental analysis on what's going on with the USA 500. You can see that this is an uptrend market report over a weekly period, since our analysis suggested the USA 500 would increase in value. At the top, you can see some geopolitical events and fundamental analysis that can influence the USA 500 index. For example, the part about the Fed and interest rate expectations. Below, you also have some technical analysis. When using a special report, it's vital to look at the current price on which the calculations are based. In this instance, if the current price reaches 4,370 that you can see on the left-hand side of the screen here, this shows the right moment and our estimation for opening a trading position, had you decided to trade on the special report when it was active. You can see below the trend direction and the time period. It's also important that you know how to use the stop loss and take profit options. You have support and resistance levels further along. At these points, you can put a stop loss and take profit, and further down you have calculations. If you close the position using take profit, you can expect these kinds of profits at the resistance levels marked in green. If the price is going against you, you can potentially have a loss of this amount at the support levels marked in red. Finally, profit and loss calculations are based on a one-lot trading volume. A trade war is an economic dispute between two countries. It can come about because one or more countries believe other countries have unfair trading practices, including tariffs on imports. This could cause other countries to also raise tariffs in response, as each side escalates tariffs higher. The US administration has stated it believes other countries have been taking advantage of the US and that through tariffs, it will redress this imbalance. Some countries perceive US action as the strongest country in the world, bullying weaker opponents. Some countries perceive US action as the strongest country in the world, bullying weaker countries into giving them better terms of trade. In February, President Trump signed executive orders imposing 25% tariffs on Mexico and Canada and 10% on Chinese imports. The two countries responded with their own similar tariffs. China responded with its own equivalent tariffs. In April, the US imposed 34% tariffs upon all Chinese goods, which was then raised again and again to today's 145%. After China kept responding with its own tariffs on US goods, with Chinese tariffs on US goods currently at 125%. On Liberation Day, that's April the 2nd, Trump unveiled reciprocal tariffs on multiple countries, including a 20% tariff on all EU goods, in the most wide-ranging tariffs in 100 years. But these tariffs were suspended on April the 8th for 90 days. Trade wars are not considered to be positive for the global economy. As tariffs are increased, goods become more expensive. People could choose alternative products, or they could choose to avoid buying any products at all. People could also begin to worry about consequences of a trade war and could save more or hold off on more expensive purchases. This behavior could cause economic growth to slow, or worse still, could cause a recession. All of this can mean lower revenue for companies, potentially provoking a sell-off in stocks, or reduced oil demand, which can push crude oil prices lower. This is exactly what has been seen, particularly since April, when both stock prices and oil prices fell sharply lower. However, safe haven instruments such as gold and silver could benefit from this situation. There are 3 red lines in the chart you can see. The first shows when the US first implemented tariffs on February the 1st, the beginnings of a potential trade war, but it was still unclear whether it would develop to a trade war. You can see that the price of gold jumped by 2.46% in the days following US implementation of tariffs on Mexico and Canada. On April the 2nd came Liberation Day, and the markets were absolutely roiled, with almost every instrument falling sharply. Gold fell by 3.02%. The third line represents April the 8th, when Trump eased trade war worries by suspending many tariffs imposed on Liberation Day, excluding those on China. The price of gold has surged by 11.56% since then. It's also worth noting that gold is hitting repeated all-time highs in the period on the chart marked by the trade war. So why did gold's price pull back on Liberation Day when you could expect everybody to rush to gold as panic set in? For one thing, people were taking profit following a recent record high by gold. But more importantly, traders were losing big money on the markets and needed to cover their losses. They might not have wanted to move away from gold, but multiple instruments were crashing lower over a period of a few days. Thus, it's not uncommon that gold can also be dragged down. As the markets recovered, traders piled back into gold, feeling confident that its price would push higher, as it has. Silver is used in electronics, computers, phones, and cars. An escalating trade war is expected to reduce demand for these products, and thus silver's price fell. This also explains the relief rally seen by silver since. On February the 1st, silver prices mirrored gold in moving higher by 2.26%. On Liberation Day, silver prices fell through the floor and were down by 15.61% by the end of the trading week. As with gold, silver prices recovered when many tariffs were suspended, jumping by 8.98%. These moves could seem inconsistent with silver's safe haven status, but this is easily explained by the fact that silver reacts to industrial demand, since it's used in many consumer products, including those I mentioned: electronics, computers, phones, cars, solar panels, etc. In a global trade war, demand for such products diminishes, and thus silver demand also falls, leading to lower silver prices. There are other factors that influence gold and silver prices, of course, including monetary policy, above all, by the Fed. More interest rate cuts are positive for both metals, and of course, with both gold in particular, an unstable geopolitical situation causes a lot of safe haven demand. So a continuation of the Russia-Ukraine conflict, or of conflict in the Middle East, could support higher prices. However, the main factor influencing gold and every other instrument in the markets is the trade war at the moment. And nobody can be certain how this will unfold, largely due to the unpredictability of the President of the United States. In the past, the US has had a relatively set or stable policy, but the current administration can create a new policy on one day and completely reverse that policy some days later. But this instability is actually supportive for gold prices. It's partly this reason why all the major investment banks, such as Goldman Sachs, Bank of America, and JP Morgan, all expect gold prices to continue rising. Of course, we at ForTrade will be following gold and silver prices amid the trade war very closely. So please do get in touch with a customer service representative if you have any questions or want to take advantage of the trading possibilities that the trade war and Gold and Silver Presents. Until next time, goodbye. Please join us at 4Trade again soon.